Hello everybody, this is Stefan Dote from TradingCandles.com. We'll do our normal disclaimers. We are not a licensed financial advisor, broker, or dealer. This video is for educational purposes only, and the viewer should do their own due diligence before making any financial investments. Today our goal is just to actually run through the portfolio that we're holding on to. Maybe that will help give some trade ideas and definitely show some nice looking charts. So we're just going to get right to it. It's kind of off the cuff here. I don't have anything really planned out. So the first chart I'm bringing up is the SPY. It's a proxy for the S&P 500. And it's good just to start looking at, the general market. As I was pointing out here, this orange line, or have been pointing out, should I say, is the 125-day moving average. And we can see how well it's been respecting this moving average. Here we can also see I have the 10% number drawn in, and I have the 11% number drawn in here. So that means that at this point we were 11% off of the moving average. And here we were 10% off the moving average. I'm going to go back 2 years and show you how strong this support is. We have hit this average again 1, 2, 3, 4, 5, 6 times. And we have been above it at these levels. Each of these levels, when we get over 10%, we tend to have a pullback at the least to go sideways, but frequently pulled back to that 125-day average, even back here. Now, a lot of people or traders will say, boy, this trend is kind of long in the tooth. Once you have more than 5 touches on the support area, you should start to become wary. But as the tenant goes in technical analysis, the trend is your friend till the end, and I have not seen this trend end. So I'm starting to watch for a pullback here since we're getting up at 10%. Anything 12% or more, we should be pulling back somewhere in this area. We don't know how long that's going to take. A market like this with low volatility can go on for long periods of time. But you will notice we had this target drawn back in here in March. So 3 months ago, we picked 195.56 and we closed at 195.37. So again, the technical measuring techniques, literally after 3 months, are 19 cents off on a $190 stock. It's 19 cents after 3 months. Pretty incredible. Not impossible to learn, and extremely powerful tool. And I keep, pushing on learning that. But I think the reason will become obvious as you continue to watch these videos. Shrink our MACD a little bit here. Okay, so I'm just going to run down what we have. We have Ameriprise Financial. Has made a nice breakout on average volume. And actually, I'm going to go ahead and just pull the Fibonacci measuring technique on this breakout here. It's really kind of right here. I'll get a benefit of the doubt down here. And I'll draw my line in. Here, and the tool. Now, if you don't have a platform without that tool, you can do the math formula. I believe I have it on our website. It's more of a bit of a pain. Most good trading platforms will have that on their website. So we have target of $124. And the time frame of that would be about 2 months, so July, August, probably sometime September is our time frame. And so anyway, it's a good looking stock. You've seen this a lot of stocks at their highs recently, but as you can see, this one has broken out. It closed at its high. The MACD is still turning up. It could definitely pull back a little bit, but the strength in the financial sector is looking pretty good, and so that's the reason we have held this particular stock. APH is one of our new additions. Simply uptrends, turning up on the MACD, simply kind of a bounce trade, and this actually has a breakout also, but the breakout target itself is relatively small. We're probably talking 100 or so, and again, stocks over 90 usually run to 100, so we're looking for it just to go up somewhere into here. Probably a shorter term trade, especially with this kind of volatility sitting in there. We can look at the Forex, but we're not suggesting trading any Forex right now. We've been holding this for a very long time, and mostly because we're interest positive. In other words, the Aussie has a much higher interest rate than the USD, so we make that difference. And as the economy improves, the Aussie will get stronger. But the Aussie is heavily tied to China, so it has to go with China. And if our economy gets stronger faster, the dollar will strengthen. So it's already had a lot of the sideways movement. Under normal business conditions, much more cyclical. But we just have a very small position in these, so low risk. AZPN is a biotech. We almost got taken out down here at earnings, and we used our two-year exit as our stop, which it never really even came close to breaking. This didn't cross, no cross there, no cross there, so it pretty much kept us in, and since it's been up above this line this whole time and bounced off of this support level, then we didn't enjoy the ride down, but it was a sign of strength. And again, that's in the biotechs. They've been kind of coming back a little bit, and biotechs are always volatile, so you have to expect this kind of movement when you trade the biotechs. Baker Hughes, this is in the oil industry. This is one of the stocks we traded out for some of the transportation stocks we had. It itself is trying to make a breakout. I wouldn't call that quite a breakout yet. It's, as I say, more of the cattle pushing its nose through the fence. But it's got a good uptrend, so we're just holding on to this in a trend fashion. We have good support down here. We have this gap. I could fill it down into here, but this would be the region where I would see a pullback to. Then, depending, whether we would add more to it or not, you just have to evaluate the sector at that time. BIBB is another biotech. Again, has not been doing great, but we're using our two-year stop, and it has not come close to crossing that yet, so we're going to just hang on to it. I'm going to keep running. Skip BPY, that's just one stock we have that came over. So now here's a stock, CBOE, which is Chicago Board of Exchange. I don't know if less trading is going on or why they're having a really hard time. But you can see it's come down, it made a run up, come down for a second high. So this was kind of bullish, but just can't break back through this area here. Now we've got this hammer and these two little opposing tails, a bottoming tail and a topping tail. So a little area of indecision. But basically, if you look at the two-year, and a question might be, well, when do we decide to use this two-year stop? Where did this come from? Well, when we're more trend trading, which is, we're kind of playing the bounce, as they call it. We're looking for a stock with a long-term trend, long-term uptrend. We don't want stocks that look like this. Even though Apple's making highs, I don't want this, you know, that's a good trade, but it's a different kind of a trade. So I'm just looking for something that has a big wave behind it. You know, push, 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 push. And now we've got in here, and we have a sell signal here. If you look at the values of the DMI, these are exactly the same, so they're touching, exactly the same. And the last value of the moving average, to get out that on there, is, so I can't help it, but the last value of the yellow line is 5091, and the value of the lower line, the blue line, is 5076. So the shorter moving average is still above the longer moving average. So we need all three of these to give us a negative signal for an exit. So at this time, unless we have an up week next week, we are most likely to be getting taken out of this trade. First off, we'd really have to get the price back up over this moving average, because if it stays down here, it's most likely going to pull up below the blue one. And we'd have to make a pretty big move to get a green arrow here. The only question would be, if we can get an up move here, this may not cross. So that would only be our saving grace. That's the only saving grace I see for us not getting taken out of this. Now, I just looked, and we have had one loss out of the last 21 trades since March. Now, we did have more losses since February. It was a down month, not financially, but just in number of trades. And the last 14 in a row have been winners for about cumulatively 100% return. So to take a loss on one, I am not going to cry about it. That's just par for the course. We have a 70% win ratio, so we're well within that zone or area. And we also know that over the course of time that we're averaging a 4 to 5% return on a 21-day hold time. So that's about an 80% return a year if you're fully invested. Now, we're not typically fully invested, but even not being fully invested, that's a good rate of return on your money. And we're happy anytime we can maintain anything above 3% per month is a very good return overall. Any money manager would love to have that type of return. So CBS, I think everybody knows what CBS is. Down twice. CBS, I think everybody knows what CBS is. Our favorite comedian David Letterman's retiring sometime soon. Not sure when, if he already hasn't, but it's had a nice run up, but then it took another nice run down. I have a 75 fundamental price target on it. I don't think we're about to cross in the 2-year, but let's just take a look and see what that looks like. So this, very much like BIBB, which we just looked at, actually had negative cross, but the faster moving average had not crossed below the longer moving average. So we held on to it, and we're going sideways. We've gotten another positive signal back here. So that kept us in the trade, although the chart's looking a little bit ugly. I see no reason why the uptrend won't continue. And again, to take the noise out, I mean, this looks like a really choppy chart, which it is. I mean, we've gone down 15 points, but over the long term, we've gone up maybe 80% in 2 years. So, 40% a year is not too bad. And as a trader, you can see these relatively small candles. These are weeklies. Then all of a sudden they start getting bigger and bigger. And then volatility is coming in. So it's just kind of a sign that, look for anything out of the ordinary. Comcast, our favorite cable company, they've been trying to make some acquisitions. Now they're having a breakout here. Just a little tiny one. Take that there. That puts us back up at 55. So this breakout here will actually put us back up at the top from a technical measuring standpoint. So this is not a really good optionable stock, but if you're an options trader, this may be something you would, maybe sell some options down here or buy some calls. But at this point, we're just hanging on to the stock and riding the trend. CRL, another biotech. You can see all the biotech charts look pretty much identical, not unusual. Again, 70% of the stocks in the sector are going to look like the sector. 2-year chart pretty much looks like the same. So hopefully some money will come back into this sector and push it up a little bit. We get DuPont, which just is kind of the train that keeps on going, and reasoning behind this is it's going up. And just add to it, there's a little breakout here. So this is really more of a trend trade, which is kind of funny because I started out as a very short-term trader. Very, not so much as a day trader, but a swing trader where, 3 or 4 days was a long time for me to hold. And now the market conditions have become such that the trend trading seems to be what's making the money. And you got to change your strategy with the market conditions. So after a while, you learn to just shift with the market. It's almost like you're not even thinking. You have your strategies that we have 3 or 4 strategies we use, and as the market condition changes, we just naturally gravitate towards those strategies. So we have Disney. We've added to this position recently on this breakout. I have a smaller target here. If the economy stays good, I wouldn't be surprised to see this go even higher. But this is in my fundamental and technical target range, so we would definitely be taking some off the table up in this area and maybe let the rest ride for a little while. EFII, they are some kind of, I think they're some kind of health medical distributor. I'm not exactly sure what they do. And that sector has been going up itself recently. So again, this is just one of those weird stocks that I don't know that much about. It has a good trend going, and it looks a little bit actually like the biotechs when you look at it. So we're using the 2-year stop on most of these since they're trend trades, and this one hasn't broken it yet. The euro-yen, again, this thing is just sideways beyond belief. And just for fun, we can go ahead and look at a 2-year chart. A lot of you are not Forex traders, but this has a lot of great patterns on it. So we've been just riding this thing since, I don't know, down here probably. Sideways, sideways, sideways. Now, we were interest positive on this. Now, since the European Union has dropped interest rates negative, now we're going to be interest negative on this. And being sideways, we're going to watch this chart real carefully, and we're going to take our money off the table if we don't see some upward movement. Because there's a difference between investing in currencies directly, which is where you're buying futures on the currency, and where you're buying forex, where you're buying a pair, when you're playing the exchange rate. So we won't go into depth in that, but that makes quite a bit of a difference. Let's see. So this is general dynamics. Let's get back down here to okay, so here's general dynamics. So we hit our price target, again, almost to the T, and we sold this off, I believe on Friday. We bought in at 107.68, somewhere down here, off this bounce probably. And we made about 13 points. We made 12% in 70 days. So 12% basically in 2 months on this. Good return on your money. This breakout target came off of the breakout of this bowl here. A lot of people will say this is a cup and a handle, and just technically it's not, because the cup and handle comes after a downtrend. So a cup and handle is like this bowl, and it comes and breaks out of it and goes back, and then it takes off. So that's a bullish formation. However, it comes after a downtrend. I have a friend who keeps saying he was trading a cup and handle, and I kind of find him, and I finally realized what he was talking about, which is just a simple breakout. So here we have gold. Now we've just taken a very small position in gold a little while back. Actually, we'll break it down a little bit. I think I took it up here. Wouldn't surprise me to see it fall down here. I don't usually trade gold very often unless it's at a really strong support. And so this is just ugly, and I'm just holding on to it. If it does come back down into here, I will buy some more. Otherwise, I bought a small amount, and I'll just hold it. The great thing about gold as compared to a stock like silver is gold doesn't go to zero, so most likely eventually you're going to get your money back, even if you're very old. So don't tie too much money up into something. And here we have Hanes Brands. Again, we have a $100 target fundamentally on this stock. Things just keeps going up and up and up. We've added more to this position, probably 3 or 4 times over this area in here. And if it keeps performing like this, I see no reason not to. And we'll be looking to take profits, a little bit higher. And here's Ingersoll Rand. This has been very choppy. It ran down into this strange formation. Bounced back up off the 50-day moving average. Had a banner day there on Friday. Average volume, but still a banner day. And it's right up here at this little breakout. From here, which would send it up into the 67, 68 area, but it's got to get up here first. So if we get up to over 63, probably going to see 67 or 68. And I'm just curious to see what a two-year setup looks like on this. So this was actually pretty good, a wonderful run. Comes down and bounces square off the 40-week moving average, and these things came so close to crossing, but they never did, and that held us in. And It took a long time to learn this technique, and I will say I developed it, but I actually got the parts of it from 3 different people. So the lower part here, the DMI, is Wells Wilder, and I came up with using that. And a friend of mine trades, uses the CCI a lot, and I fiddled with the time frame on both of these and got them to coincide so there would be a confirmation. So you wouldn't get whipsawed if one went and the other one didn't. One of them would often come back. So these two are just prevent you from getting whipsawed. And this moving average, these numbers, I mean, everybody does a moving average cross sometime in their life. But another trader I know figured this out, and it essentially mimics a 50-day, 200-day moving average cross, which is what people always talk about on television. They call it the death cross. Once the 50 goes below the 200, I don't know, the Grim Reaper comes out or something. I'm not really sure what happens, but apparently it scares them. But he figured out that this was essentially mathematically the same on a weekly chart, and so I began using this in combination with this, and then actually there's 4 parts. Is the trend itself, which I started realizing that this degree, which I'm just going to guess it's 20. I don't know what it is. Let's find out. We run this up just like that. That angle is actually 12% angle. I'm reading this correctly. Yeah, 12% angle. So I'm looking for something that's running up 10, 12% angle. And again, that's my little tool we have here. This is Ameritrade. It's really Thinkorswim's platform. I do not work for them or sell things for them, but I've been using their software for a long time, and their charting software and option modeling software is far superior to anything I've seen. I haven't seen anything close to it, so maybe they should pay me for advertising for them. But anyway, this is a great technique in a trend trade, and it requires those elements and a lot of looking to find stocks and other tradable instruments that actually fit into that model. That looks easy, but it's harder than it seems. It takes time, which is why we're here. Go to our website, check out our watch lists, and watch the videos, and we'll help you find them. Save you a lot of time. If you're a professional and you come home from work, then you can just pop in and check out real quick what we're looking at and what we're trading and what's new, and you can save yourself a lot of time. ITT Corporation, I am not sure what they do. We just bought this on the chart. We have a lot of chop in here. The 2-year looks pretty good. So we're just trend trading this until we basically either get a good pop and get a good percentage out of it, 7, 8, 10%, and we'll just take our money. Or if it goes against us, then we take our loss. And that's the way of trading. Now, a lot of trend traders, they won't get out until it breaks their support level, and they usually keep it 2 behind. So that'd be your first support level, and that'd be your second support level. So they would just keep riding this up until it finally broke what they would consider support. I don't like giving money back. So we get up and make a profit, as you've seen on some of these trades. We're just taking the money and going. ITW, this is an industrial stock. I'm guessing they make tools. I don't know how tool works. Just another good trade. There's another little breakout. Pretty small price target. And like I was saying, we're going to see a lot of breakouts because the market has broken out. When you look at the market, here is the breakout back here. So since we've had a breakout in the market, you're going to see breakouts in stocks. 70% of stocks are going to act like the market. So we broke out our, you're going to break out your trading, breakout trading strategy. And if you're already in it, then if you're already in the stock, then there's a good chance it will break out if it makes it that far. JAH, some kind of consumer stock, I believe. They make, I don't know what kind of products. I think even some of the stuff they sell on the TV. Not really sure exactly, but came into this decent, excuse me. Excuse me, I'm having a little issue with my voice today. It broke down out of this ascending triangle, just been running sideways, haven't given a sell signal, so we're sitting on that. And as you can see, we have a high win ratio, but we do, take some drawdowns and let things ride back a little bit. But we have our line in the sand, and when they cross that line, we are out. MGA, they make auto parts. This is another one of those stocks that keeps on giving, and the 2-year chart looks great. You can see we had this breakout back here. Went right exactly to the line, stayed there for a couple days, and we added some more back in this area here. But we're going to let this run. This thing has been really strong. Let this MACD run up a little bit more. And, if it gets up in here, we may take some profit off the table. MS, we sold this stock. I'm going to take these studies off of this. It's just kind of ugly that way. You can see how much it changes the look of the stock. We like Morgan Stanley, but it's never been a good long-term holding stock. But as one of the banks, I like it. I usually trade XFL on the banks, which is XLF, which is the financial sector. But anyway, we've been holding this for a while, and we finally wrote it down. And we finally up. We sold it on Friday, so we bought it for $30.60, sold it for $31.92, 4% gain over 80 days, so 2.5 months. But we did take our money out of the deal, and we're probably just going to let this one be on its own. This is a good trade. So it's a pretty good trading stock. And here you can see we had this double bottom. Let's focus right in on that one. Sure, I wanted to. Okay, there we go. So it comes down. You get this lower MACD we talked about, runs up, makes this W, and then it makes this much higher MACD. So we have a similar low, but a big divergence here. So that's a pretty big sign of what we call a double bottom. You can see a little bit better here. So very bullish sign there. So that's the kind of trades you want to make on a stock like this, not so much a trend trade. Look at the 2-year just to get an idea what that looks like. So, we felt bullish in terms of how this stays above that average, but you can see it's a lot more choppy than the other ones where we had small candles just kind of going up this straight line. So a little different flavor to that stock. We'll, try to get in and out faster. We probably made the wrong trade move on that, but we came up with a profit, and that was a lot to do with the way we managed our stops. Sometimes you make your money on your entry, and sometimes you make your money on your exit. And here's PKG. I really liked this stock for a long time. Get an 81 fundamental. It's a long way from a breakout, but definitely I don't see any problem going back to its old highs. So PNR is another recent purchase of ours. Pentar. When it says ordinary share, that's usually a foreign company. Not sure what they do exactly, but I saw this double bottom, same thing here. you can see if you take this low with that really low MACD, and then you take this low with that really much higher MACD, you have a double bottom with a divergence. And technically, once you've broken the middle point here, you've had a double bottom form, or not form, actually complete. And so we've had this run here. We, should go back up into here someplace. And, even up in here, we got it back down on this break of this divergence here is, still 5, 6, 7% in there to be had. This is more of a trading stock because back here it was a pretty highly priced stock compared to its brethren. Actually, POL, we already sold this stock. I talked about this last week, so I just need to take it off the list, I guess. Pass by on that. PPG, this one we're still holding on to. It's at a breakout, believe it or not, here. And I haven't run the targets yet, but essentially this is a pretty big target. Even if I went to the lower target on the top of my head, we're talking 210 to 215. Actually, I did run a target here to 210. And I think the next one would be up about 215. And that's been a good stock, good uptrending stock. So I've been holding on to that. Royal Caribbean Cruise Lines. So we sold this on Friday. Picked it up at 51.45, sold it at 56.66. $5.20 gain. 10% over 86 days, so 10% in 2.5 months or almost 3 months. You know what? Not bad. I'll still take it. That's still, if it was 3 months at 10%, that would be 40% a year on your money, and that's, for me as a stock trader, that's pretty good. If you can consistently have years where you do that. Now this is coming up here to a breakout. You could call that a breakout, but it's pretty tough to say it's a confirmed breakout. MACD is pretty high. Now I'll tell you what made me sell this just as much as having a 10% profit on it was this is in the leisure entertainment industry. So I decided, hey, let me go look at the stocks that usually do well when leisure is doing well. And so Las Vegas Sands, which is a casino, is not doing well. And you would notice that it's similar, or made a high back here where Caribbean Cruise Lines did. Oh, I'm sorry, Royal Caribbean Cruise Lines. And then if you look at Wynn, which is another same chart, but you notice they're not coming back up into here like that did. Now, take Carnival Cruise Lines, which is the other, which is just a choppy mess. Actually, that's not even Carnival Cruise Lines. CCL. Yeah, there we go. Carnival Cruise Lines. Sorry about that. I had the wrong stock for a minute. Yes, I have about 10,000 stocks memorized in my head. It's kind of funny. Can't remember much else, but I can remember stock symbols. So again, we have this similar high. This one's pushing up a little bit, not nearly as strong as RCL. So money may move into this sector. RCL may be just the leader, and money may be going in there first, and these other stocks may follow. But I got 3 stocks out of 4 that are not looking too strong, and 1 stock that I'm up on, that is saying, hey, you're up 10%. I'm at a pretty good resistance point here, a little bit overbought. So I just thank, as I say, Mr. Market for giving me our profit. I'm happy with that. Regal Pass, it's a trade I made, not as a joke, but sort of a bet with a friend of mine. Just only bought 1 share, so. Raytheon. Now, I've been a little, I like to use the proper words because I don't like to say scared or I'm going to say cautious, because words have powerful meanings, and again, this business is about statistics, information, weight of the evidence. So fear is not part of a prosperous trading career. So keeping that out of your mind will help you a great deal. So we've had this for a while, and it's kind of been pulling back now. General Dynamics is in the same, industry, and as you see, we sold General Dynamics. And it's a little bit of a different chart. We made some money on that. Now, we have made money trading Raytheon in the past. This chart really, isn't that bad. And it's still going up, so we're still in the aerospace industry. And just a little bit of a weaker stock, and just we'll check the 2-year on that, see where we're at. We're way above, this line here, but you can see where this can run flat for a long time. And it would not surprise me to see the tenet of technical analysis where history repeats itself and see this thing run flat, and wouldn't surprise me. So we can look at GD on a 2-year chart, and that same thing, that thing ran flat during that same period of time, and it got way up off of its. Now, Raytheon did miss its earnings last quarter, I believe, but not by much, and it being who it is, we'll forgive that one. Smaller growth stocks, you don't forgive that so much. Shpg is a drug company in Ireland, and there's been a lot of rumors of buyouts on stocks, and you may or may not remember, but we had purchased this, and it ran up very fast into earnings, and we had a decent profit, and we sold half of our position. And we are still holding that half, so we wrote it down, and it's come back up, actually a little bit higher than when we even sold the first half. So we're letting that second half ride, and we did, take some money off the table. And it's not always a bad way to do things. Again, we like to leg in for sure, and sometimes either leg out. A lot of times just take our money, but I seldom, jump all in at once. And again, here's silver, it just keeps bouncing off this line. We just keep adding to it. And not much to say. If it breaks, then we're going to keep adding. And down to 16 or so, because again, this is not a stock, and eventually, when the economy goes and the business cycle goes, this is going to go up. So it's much safer to hold. I would not take a stock. I wouldn't buy a stock that looked like this to begin with. I have friends who trade stocks like this all the time, and they do pretty well. But I'm not this type of trader. But there's a safety net under this. And, if you have the time and don't invest too much of your portfolio in it, you'll probably realize a good gain eventually. STJ is one of our newer additions. We've traded this stock before. It's the Children's Hospital, do cancer research. Basically, just having a nice bounce right here. Bouncing off the 125-day. It's riding up it. So we thought, what the heck, let's give it a try, throw a little bit of money at it. We, again, didn't take a full position. We'll add to it if it keeps going, and we'll see if it can break this level up here, and we'll definitely add to it if it can break that 68 level. And Thermo Fisher we've actually added to. We bought some down in here. We have this run, and then actually we bought some more here where it broke over the 50-day moving average. and it's still moving up. You know, it's going to run into some resistance up here in the 125 range, but you know, having started down here, we'll be up 10 points by then, which will be good 8%. And again, you know, what happens is the people who bought up here, especially the retail traders, you know, you get back up into here and they just want their money back because they've been holding on to this and rode it all the way down. And so that's why you get the more selling, and the longer this is, you know, the longer this will hold. And because those traders don't have a system of getting out when they should, or you know, getting in when they should, they're trading on that fear and that emotion, and they're just getting grinded up. That's, you know, kind of what the institutions often refer to it as the grinder. Twitter, we just I call this to the grave stock, where we own a couple that we just bought big names on the IPO. This is Facebook, that type of thing. So it's not really a trade. It's just one of the few buy and holds. The US dollar yen, again, another just sideways moving entity. You know, we're interest positive on this. Japan has no interest. We have like 0.25%, so big whoop. But, you know, we thought we might catch the trend up, and we'll see what happens. And you can see here's another cute little double bottom. Got one bottom, two bottoms with the higher. It's almost more of a confirmation because this has a higher low over here. But, and then when it broke out up here, it was a good sign to get in. And then you had your breakout here. So you got a couple of trades in here. You actually got the break of that trend line, and then it comes back down, and then you get this higher low right here with this higher high. So here's another entry right in that area right here, and then it pops up and runs sideways, and you get this huge bullish engulfing candle. So then, and a break above that moving average, so you actually have another entry right here, and then from there, it's just a ride up, you know, to the top. And you could, and this is technical trading, you know, if you draw your trend line from down here like this, you probably would have had it a trend line like that, and would have considered getting out in this area probably. If you were, you know, lucky, you would have ridden it up. But so you could have picked up 300-400 pips in here. But anyway, we'll do more Forex when it's actually time to do Forex. Right now, though, once the economy gets back into a normal business cycle, Forex will be tradable again. But you know, countries have to stop manipulating their currencies. Our country has to get back to a normal GDP, a normal inflation rate, and a normal interest rate. When we get those three things back into their norm, then currency trading will become more predictable again. Because again, you can trade technicals, as you can see, but news, you know, information is the king of the day. Can change these things on a dime. And we have Visa in this one. It has good fundamentals, and I'm not a big fundamental trader, but I've been in and out of this one for a while. Actually, this was my best stock last year in terms of profits. And man, the credit cards make money, so maybe a little choppy because of the consumer, but they're still going to make their money. And I have my 2-year, go ahead and take a look at that. I have my 2-year stop on this, which the slow moving average has crossed here, but these two haven't crossed. So again, we're keeping from getting whipsawed out of this stock. And it wouldn't surprise me for it to go down more, but it's going to take a little bit to break these off. And in the long term, I believe this is going to go up, and not just because of the technicals, but because of some fundamentals that are in there. Viab's another communication stock, and this thing just like put me to sleep sideways. So we're still holding it. It's just so little volatility in it that we're not as concerned about, having a 10, 20, 30% drop overnight. And we have this really nice bounce going on right here in the 2 years, so you can really see the difference. I mean, you can see that sideways trend in here, but look at the noise that was taken out of this chart. We have this nice uptrend and a sideways trend, and now look at this. This is a beautiful bounce. I mean, this is actually, for a long-term trader, this is a great entry. For a long-term trader, I would be all over this. And we get the fundamental target back here of 96. So that's one of the reasons I'm staying in it. Now, take a good look at that. We're going to go back and look at that. There's a whole different world there, a whole different world. But again, with low volatility, we're going to make some money on this. And we just have to be patient. And that's fine. That's one thing we've learned over the 14 years of trading is impetuous behavior is not good. Now, I'm going to take these studies off of this. This is ugly, really, really ugly. And let's look at the 2-year on this. This is a biotech. This is a Chinese company. And again, I really don't like investing in foreign companies because their economy, is much harder to predict, especially China, who's, manipulates and, I guess if they want to, I don't know if this is true, but can walk in and take over the company. Well, I know. It says Cayman, but that's probably just where they keep their money. So it's not as ugly here, but this is a descending triangle. You see similar lows, but lower highs. So in an uptrend, this is a reversal pattern that eventually, because they can't, sellers keep coming in at lower prices, eventually it pushes it down. We've already had this cross, and the other two are far behind. My gut tells me to sell this, but that is not the plan that I put in place when I bought this, and we have been profitable following our plan, so I'm not going to change our plan, and I'm not going to be one of those retail traders I showed you who, they panic and, make a move. I really don't want to. Sorry about that. This keyboard's a little funny. I really don't want to be one of those, people who make a move for the wrong reasons. I'll just say that. My gut tells me this is going lower. I'm going to get taken out. And honestly, it probably will go lower, and I probably will get taken out. And if it does, I bet it will be down in this area, and we'll probably take a 10% loss. But I'm going to follow my rules because that's what's been making us money. And we know that we're going to lose sometimes, so this may be the one. And I know I may sell it, and it may turn around and bolt up 20%. And you never know. We're down to the last ones. I appreciate you hanging out there for all this time. So here's XLF, financial ETF, spider ETF. These are my favorite ETFs, the ones that start with XL, spiders. You can see how low the volatility is in this thing. It's only gone up 10% in 9 months, so you can put money into this and not be afraid. And this has had a breakout, but the target's very low. You can look at a 2-year on that very quickly. I mean, you got to feel pretty good about that. And actually, this is making me want to buy more, so we may buy more. It's held above that. Matter of fact, we should probably just look at the last couple on this 2-year chart. XLI. And so that's had this big breakout here. It's looking really good. You can see that this is almost as wide as it's ever been. So if these get really wide, then you might have a pullback when they get really wide. Often what you'll see is they're small, 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 then they get really big, and then they start making smaller ones. And this is kind of a complicated indicator to understand, but it's a good one once you understand it. Here's healthcare. It's on the verge of making a breakout. It's still a nice chart. It just hasn't broken this, and it's keeping going up. And this is just showing you how the economy is, going. Here's XOP, which we got into last week or the week before, I forget. We switched out of the transportations into oil and gas. And here is pharmacy, which is probably kind of the ugliest of the bunch. You can see it broke here and has come down. It looks a lot like the biotech. And just for comparison, we'll run over and look at them on the 9-month chart. So nice breakout there. It's holding the 125-day moving average. That seems to be a good moving average. A lot of things seem to respect it. You can see, XLV. Now, you look at this and you're a little more hesitant to invest in these stocks, but when you look at the 2-year, you're a longer-term investor, then the wave behind it, that big trend, here's XOP. Looking at this, I wouldn't want to get into this very much. We're getting back near our highs. We put it in down here on this bounce. So we do have some profit in here, and we would consider taking it. But we're going to let it run a little bit, hopefully in the right direction. And pharmacy, I don't know, it's just ugly, and I don't know what we're going to do with pharmacy. We're going to watch it closely. That's all I can really say. So anyway, it's been about an hour, definitely taken up quite a bit of time. Those of you who actually made it through this whole video, good for you, and thank you. And I think if you're new to trading, it may seem overwhelming, but I'm sure you absorbed some tidbit of information. And again, visit us at tradingcandles.com. Please send us email, comment, send us a stock for us to evaluate for you. We'll post it up and let you know what we think of it. And anyway, have a good trading week.